we are breathing rarefied air in terms of volatility.
The markets are also going to feel the volatility for time to come.
The bigger picture is you're always looking at the systematic risk.
It's been a seismic shock, a seismic exogenous shock has hit the system.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, March 14th. Our top stories today. Panic selling in Chinese tech stocks. The Hang Seng Tech Index falls more than 10%. There's concern about COVID lockdowns and that Beijing's ties with Russia could lead to a backlash against Chinese firms. China's COVID-0 policy back in focus. It's hitting key Apple supplier Foxconn as it halts iPhone production in Shenzhen after the city is placed in lockdown for at least a week. And the US and China are set for their first high-level in-person talks since the invasion of Ukraine. Meanwhile, US officials say Russia has asked China for military assistance. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger here in London and Matt Miller in New York. Kailey Leinz is off today. And Danny, it seems a lot of reasons for markets to be nervous, a lot of reasons for us to sell risk assets, but the market's not taking the opportunity to sell at all. The market focusing on the glass half full, perhaps. What diplomacy maybe can deliver instead of focusing on the war on the ground and concern around COVID in China once again.
U.S. European futures holding up well, especially considering what's happening in China. Anna, let me get to that because Chinese stocks have been absolutely slammed today. Those listed in Hong Kong putting up their worst day since 2008. Now, it's both the macro and the idiosyncratic. The macro being more lockdowns in China, higher COVID cases. It means a Foxconn factory that produces Apple phones is shutting down in Shenzhen. And at the same time, there's concerns of demand with new lockdowns. So that's why you see things like iron ore down more than 6.7%. But the pain is not just China broadly. It's concentrated in tech. So you have factories shutting down, 11% down on Hong Kong tech stocks. But you also have the idiosyncratic risk of more regulation. Now, this is focused on Tencent, a Wall Street Journal story saying that they are facing a record fine. This is over WeChat Pay. Regulators there saying that they violated anti-money laundering rules. Comes to accepting illicit payments for things like gambling. Tencent falling nearly 10%. That is its worst day in more than a decade. Finally, worth flagging the yen there. Up, U.S. dollar up 0.4% versus the yen. Yen at a 2017 low. Remarkable to see this not able to behave as a haven. Japan imports commodities, so that hurts it. And of course, Matt, the Fed hiking interest rates, so the dollar becoming the haven of choice.
It's pretty amazing to see that shift. You'd think that more people would flock into the yen if they're concerned about geopolitical risks. We see S&P futures up 0.7%. And as Anna was saying, it's pretty surprising considering the huge drops we're seeing throughout Asia that we're still bidding this market. Right now, the 10-year yield rises as investors let go of that debt. 205.68, so that 10-year yield continues to climb. 105 for a barrel of Texas Intermediate right now, down 4%. So keep your eye on oil. Obviously, that's where all the volatility and all the focus has been over the past couple of weeks. And then Bitcoin. You know, there's an argument to be made for looking at Ether rather than Bitcoin. Right now, Bitcoin, the OG crypto is up 1% at 39,028. Ether is up 2%. So keep your eye on the crypto space as we see a little bit more risk on coming into these trades. Anna?
Yeah, and as you launch your crypto show later on this week, more on that, no doubt, later in the program. But to Matt's point about what we're seeing here in Europe, about how European equity markets and US futures are not taking the opportunity to sell, we do see positivity. It is really varied, though, across the European geography right now. The Xetra DAX over in Germany up by 2.3%. The IBEX, the FTSE MIB in Spain and in Italy also doing pretty well. But in the London market, we see some relative weakness, even though we're even there in positive territory. And you might not expect to see that. I can show you what's going on basic resources because this is acting as quite a weight on the European sector space. So maybe this is the one positive that is helping other risk assets move to the upside. That is that we're seeing some of those commodities come off their recent highs. That means negatives for basic resource stocks, but perhaps room for other risk assets to rally. So that sector down by 2.2%. The auto sector is moving to the upside, though, and that's lifting the German market. More on that in a moment. Process. This is another interesting take on what Danny was talking about what was weighing on the Asian session. So Process is Dutch listed. It's a business, though, that has a big stake in Tencent over in China. And as a result, we're seeing that China tech story, that tech weakness Danny talked about, spilling over into the European trading session, certainly when it comes to tech exposure, because there's the broad picture around lockdowns in Shenzhen, there's concern around regulation, and the specifics around Tencent as well. VW to the upside, up by nearly 7%. This company putting out earnings just after the bell on Friday, and this is the first time the market has had to react to that. So it's the earnings themselves and also the outlook looking fairly robust. They're talking about having substantial hedging in place around some of those commodity risks that this kind of business faces. And Telecom Italia up by 8.8%. An M&A story, which makes a change to talk about one of those, Danny, at this point. It seems that Telecom Italia is saying that, yes, they are going to allow senior management to talk to KKR, private equity bidders for the business, even though they say they prefer a sort of domestic solution, a reshuffle, a restructuring of their own business rather than that takeover option.
A lot of that geopolitical uncertainty means that a lot of deals have been put on hold, so good to see that some are still going forward. Now, let's get a look at what else you need to know to set you up for this week. And first off, EU finance ministers meeting today for the Eurogroup meeting. NATO defense ministers meet on Brussels on Wednesday. Also on Wednesday, we're going to get the big one, the Fed rate decision. Then the next day, it's the turn of the Bank of England with their rate decision. And finally, on Friday, it's the BOJ, their rate decision, Matt.
All right, so a lot going on in terms of central banks this week, but right now we're really focused on what's going on in China. They've locked down 17.5 million residents in Shenzhen as they face their worst COVID outbreak since the start of the pandemic. Apple supplier Foxconn halted operations at its Shenzhen sites after the lockdown, so it won't be producing iPhones today. And, of course, the market has come crashing down. Let's get more with Bloomberg's Debbie Wu, who covers tech in Asia. Debbie, I really want to focus on the market first. What we saw last week was pretty incredible, and it continues this huge sell-off in China tech.
So, yes, so what happened today is the Hang Seng Tech Index in Hong Kong shed more than 10%, and it is poised for the largest drop since the inception of the index back in July 2020. And let's couple with the fact that Chinese companies are now facing renewed regulatory woes. So Wall Street Journal reported earlier that Tencent is now facing a record fine after the China Central Bank found that its WeChat Pay may have violated anti-money laundering laws. So and Tencent lost more than 10% in Hong Kong as well today.
Yeah, Debbie, really interesting story. So there's the broad lockdown story. There's what that's doing to the Shenzhen region, and that's what markets are pricing in. Markets pricing in supply chain disruption as a result of that, and also those Tencent specifics. But on that supply chain disruption, we've heard from Foxconn, a key supplier to Apple, of course. What's the latest there? What kind of disruption can we expect to see to that business?
So Foxconn has halted operations of its campuses in Shenzhen after the government ordered a lockdown in the tech hub city. And among all the campuses that Foxconn is suspending operations, one of them is a key iPhone production site. Although the scale of that campus is much smaller than its primary iPhone production site in central China. And impact so far has been quite limited. Other Apple suppliers in the region, which are suspending operations, said that they see limited impact for now. And then we'll see what happens next.
Okay, Debbie, thank you very much. That's Bloomberg's Debbie Wu reporting on all things tech from Taipei. Now over to Washington, where U.S. National Secretary Advisor Jake Sullivan said the U.S. is watching whether China provides material support or economic support to Russia. He spoke on CNN yesterday.
We will not stand by and allow any country to compensate Russia for its losses. There will absolutely be consequences for large-scale sanctions, evasion efforts, or support to Russia to backfill them. We will not allow that to go forward and allow there to be a lifeline to Russia from these economic sanctions from any country anywhere in the world.
Now, Sullivan is meeting today in Rome with China's top diplomat, and it will be the first high-level in-person talks since Russia's full invasion of Ukraine. Anne-Marie Horder, and Bloomberg Washington correspondent, joins us now from D.C. for more. Anne-Marie, what is the U.S. hoping to get out of these talks with China?
Well, I think it's about amping up that pressure on Beijing to make sure, really twofold. One, news over the weekend that they don't go ahead and come to the rescue of President Vladimir Putin, who's looking for military assistance from Beijing. And then second, to make sure that China doesn't try to go around the U.S. economic sanctions. And this is really the second warning we heard from Jake Sullivan on the Sunday shows. Last week, we heard from Secretary Gina Raimondo, making sure the chip sector in China was on guard about this and making sure that those warnings are there, that they will face pressure from the United States and they will face penalties from the United States if they were to come and at the behest of the requests of President Vladimir Putin.
What do we know about the accusation that Russia asked China to provide military support, including weapons?
So we don't know exactly what kind of weapons these are from the U.S. government. We also don't know how they have that intel. And another U.S. official told Bloomberg that actually this request was made after that initial invasion on February 24th. But the news is coming at a time when you see President Vladimir Putin struggle as this war enters into a third week. For China, though, the question is really or not it wants to get involved in such a very direct way. China this entire time has really been trying to walk this line. They haven't come out and condemned Russia directly, but at the same time, they also haven't had this support towards Russia. And if they were going to give weapons, that would totally get rid of that veneer of neutrality that China is trying to project. So it's a very interesting question. And of course, it comes at this time, a sensitive time, when you have Jake Sullivan, the president's national security advisor, going to Rome to have these one-on-one, high-level, sit-down talks with China's top diplomat.
OK, so we look ahead to those meetings then. The U.S. and Chinese officials set to meet, as you mentioned there. Anne-Marie, thank you. Anne-Marie Hordern joining us there from Washington. Now, talking of talks, negotiators from Russia and Ukraine are set to hold their further talks today. That's after Moscow increased its aerial attacks on western areas of Ukraine, closer to the border with Poland. Ukraine's President Volodymyr Zelensky says he hopes for a meeting with Putin.
Representatives of our countries are holding daily talks via video conference. Our delegation has a clear task to do everything to arrange the meeting of the presidents. The meeting, I'm sure, people are waiting for. It's clear that it's a difficult story, difficult path, but we need the path.
Let's get more with Bloomberg's Agatha Cantrell, who joins us now from the Polish-Ukrainian border. Aggie, of course, it's been a really interesting weekend, a destabilizing one, no doubt, where you are, given that we're now seeing Russia attacking western parts of Ukraine more aggressively, closer to the Polish border where you are.
Hi, Anna. Yes, so on Sunday morning, we saw that there had been a missile strike on a base called the International Peacekeeping and Security Center that's just over the border from Poland into Ukraine. And this has obviously caused a great deal of concern on the Polish side of the border as well. The local mayor from that area of Ukraine said that this was yet another reason why NATO needed to close the skies, as they put it, essentially put in a no-fly zone over Ukraine. That doesn't look like something that NATO is likely to implement, but is still seeing a greater amount of concern on the Polish side of the border now that the fighting seems to have, for a certain extent, come closer, although it needs to be noted that most of the fighting is still around Kiev and also in the south and east of the country.
Is it fair to say, Aggie, that you're at kind of the epicenter of the migrant crisis right now? What can you tell us about the international response to all of the refugees flooding over the border?
Yes, Matt. So we're seeing so many more refugees come over the border in these coming days. And already Poland has taken in 1.5 million of the total 2.6 or 2.7 that have crossed the border. Because there is no willingness really from NATO to close the skies over Ukraine, really a lot of the pressure comes from international sanctions that could be put in place. Like, for instance, we're hearing that the EU is now mulling banning the sale of cars valued over 50,000 euros to Russia. And sanctions like this upping of the pressure economically to Russia is really the main tool that the EU has right now.
Aggie, thank you very much. That's Bloomberg's Aggie Cantrill on the border between Ukraine and Poland. Now let's get a look at some of the stocks on the move. I want to come back to this China story because China ADRs listed in the U.S. falling pre-market. We're starting to get to dot-com level of pain in these stocks. Bilibili, for example, the tech company, again, Chinese listed in the U.S. in an ADR down over 10%. The concern is that with more regulation coming onto Tencent, according to Wall Street Journal report, that will spread out as well. Now, the other tech story, of course, happening in China is the Foxconn closure of factories in Shenzhen that make iPhone products. Apple holding up pretty well considering that. It's only down about 0.05%, so really unchanged at the moment. Perhaps there's less fear that now is typically a slow season for iPhone orders anyway, so maybe it's okay if there's less production. But at one point, this was down about 0.25%. Finally, Lockheed Martin, more of the geopolitical story here. According to DPA, a German outlet, the German government is looking at replacing their fleet of what's called tornado jets. I'm going to admit ignorance here. This is definitely not my strong suit, but it's a fleet that's about 40 years old, and they might replace it with some Lockheed Martin stealth jets. So that is up 2%, Anna.
Okay, that's the pre-market roundup. Coming up, Andrew Sheets, Morgan Stanley's chief cross-asset strategy voice. We will talk to him shortly about what's going on in markets. The market's right to be taking a glass half full approach, which is what we seem to be seeing from risk assets this morning. From a geopolitical perspective, we will talk to Bettina Renz, University of Nottingham, Professor of International Security. That conversation coming up later on this hour. Plus, the 18 minutes of trading chaos that broke the nickel market. You can read all about that at NI Big Take. That's our Big Take story for today. Go to that function on your Bloomberg terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller in New York. Danny Berger with Anna Edwards in London. Kailey Leinz is out today. We're just looking at a U.S. 10-year yield right now that is rising right now to almost 208. Now 208 and change. This is the highest level that we've seen since 2018. So it's been a while since the 10-year yield was this high. And our producer in London, Valerie Sarasuelo, points out that the curve is steepening right now. So the real concern was that we would see the curve continue to flatten and possibly invert. Maybe right now that's less of a concern, but we do see break-evens surging to record highs. Let's bring in Eddie Vanderwalt right now from the Bloomberg MLive team. Eddie, what does this mean, the moves that we're seeing in the bond market? I guess the volatility is pervasive.
Yeah, and look, I think this is a function of the moves that we've seen, or the high inflation that we've seen that, you know, is now definitely no longer transitory. I think inflation is proving to be persistent, and the bond market is pricing that. But I think this causes a lot of problems for portfolio managers, because how do you hedge the inflation risk at the moment, right? Do you go with gold? Well, gold is already very, very richly valued. Do you go with commodities? Commodities are really, really elevated in a lot of cases. You know, bank stocks have had exposure to Russia and to other things. It becomes really hard to hedge the inflation risk at the moment. And this is something that we're taking a hard look at the moment on Markets Live.
All right, Eddie, thanks so much for joining us. Eddie Vanderwalt there from the Bloomberg MLive team. You can check out MLIV Go on your terminal if you want to follow along with markets. Also, I want to point out, hang on, let me plug myself for a second. Kailey and I are kicking off a new crypto show, Bloomberg Crypto, tomorrow. That debuts on the Ides of March. Eddie will probably be with us on a weekly basis there, as he's one of our avant-garde crypto reporters. And speaking of avant-garde, Michael Novogratz joins us on the first program. Definitely tune in tomorrow at 1 p.m. on Bloomberg Television. You can also follow along on Bloomberg.com. Just click Live TV. This is Bloomberg.
Now, keeping you up to date with news from around the world, here's the first word news. Russia has lost access to almost half of its reserves. The finance minister told state television that the country has about $640 billion and about $300 billion can't be used because of asset freezes. He said Russia will repay debt in rubles until its cash pile is frozen. And the British government is set to offer a new system for admitting refugees fleeing the war in Ukraine after several weeks of criticism. The new system includes payments to households accepting refugees. Cabinet Minister Michael Gove told the BBC he expects tens of thousands of Ukrainians will be admitted. Anna.
Coming up, we will get back to our markets conversation. Andrew Sheets, Morgan Stanley's chief cross-asset strategist, joins us. Commodities weaker today. What will be the impact of the recent spike, though? This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. There's panic selling in Chinese tech stocks. The Hang Seng Tech Index fell more than 10%. There's concern about COVID lockdowns and that Beijing's ties with Russia could lead to a backlash against Chinese firms. China's COVID zero policy has hit a key Apple supplier. Foxconn halted iPhone production in Shenzhen after the city was placed in lockdown for at least a week. More than 17 million people were told to stay at home and undergo 3 rounds of coronavirus testing. And the US and China will hold the first high-level in-person talks since Russia's invasion of Ukraine. The Biden administration wants Beijing to use its influence on Russia to end the war. Meanwhile, the US says that Russia has asked China for military assistance. I'm Anna Edwards with Danny Berger in London. Matt Miller, of course, with us in New York. Kailey Leinz is off today. So there's plenty of geopolitics to talk about, whether it's the war itself or the US-China relationship here. Matt, what are you looking at ahead of the market open?
I'm looking at the risk-on mood that we have to kick off the week in the U.S. I think it's pretty surprising considering the sell-off that you've seen in China. But S&P futures are up 0.6%, and investors are selling 10-year treasuries, letting the yield float up to, at one point, more than 2.08%, so the highest that we've seen since 2018. Some real moves to the upside, some real risk-on moves today. Maybe NYMEX crude falling a little bit more has something to do with that. Now we're down below 105 a barrel for Texas Intermediate. And Bitcoin is rising as well, only 0.9%. Right now, $39,044. But we do see other coins in the crypto space, specifically Ethereum, rallying a little bit harder today. So definitely a risk-on signal. Danny, what do you see in terms of the pre-market movers?
Well, Matt, don't you know it's the Elon Musk hypothesis? Just a few hours ago, he tweeted that he still holds Bitcoin, Ether, and Doge. So, maybe that's helping out a little bit. But when it comes to pre-market, I should say there are some crypto companies moving higher. But I'm following this thread of the destruction in Chinese tech stocks, and that's spilling over into the U.S. session. Bilibili and ADR down 11.5% pre-market. Part of the concern is about regulatory pressures. The Wall Street Journal reporting that Tencent is facing a fine. The other concern are more lockdowns. Foxconn shutting 2 of its factories in Shenzhen that produce Apple products. It won't be making Apple products from that factory. Apple slightly weaker so far this morning, 0.2% in the pre-market session. Finally, Lockheed Martin up more than 2%. This is a report from DPA, the German outlet, saying that German government plans to replace what's called its Tornado military aircraft fleet. It's been in use for more than 40 years, so perhaps it's due for a change. So instead, the government is going to replace it with F-35 stealth jets. And that, of course, is from Lockheed Martin, Anna.
Yeah, Danny, let's have a look at where we are on the European trading story then. An hour and a half into the trading day here in Europe. And we've got European equity markets actually on the front foot. And to Matt's point, maybe that is a little bit surprising given the war on the ground in Ukraine and now concerns around supply chains to do with what's going on in China, of course, and COVID-19 there. But still, we make gains up by just over 1% on European stocks. Of course, we should focus on the Fed. We'll no doubt do that. That's going to be a big talking point of this week. Prosus is down by 10%, more than 10%. This is a Dutch company that has a big stake in Tencent, one of the Chinese tech names in focus today. And then we've seen heavy selling in Tencent because of specifics to do with that business and reports around it, but also to do with the broader lockdown story that I mentioned around Shenzhen, which is a tech hub, of course, over in China. VW up by more than 7%. We got numbers out from VW after the close on Friday. It's the numbers themselves, also the outlook, which seems to be lifting that particular stock, and also their talk of hedging, substantial hedging they say they have in place when it comes to the higher commodity prices. And Telecom Italia, nice to talk about a little bit of M&A, because maybe some businesses putting those thoughts on hold at this point, given the volatility we're seeing in many asset classes. But Telecom Italia is saying, yes, they will allow senior executives to talk to KKR, because that business, that company has been interested in buying up Telecom Italia. So we'll focus in on that M&A story as well, Matt.
All right, so still some M&A on this Monday. Let's get back, though, to the economic fallout from Russia's full-scale invasion of Ukraine. It's likely to include a further pickup in U.S. inflation, according to Mohammed El-Arian, Bloomberg opinion columnist and Queens College Cambridge president. He spoke on CBS's Face the Nation yesterday.
There will be a Putin inflation component. I estimate that at 7.9%, we will probably get very close or above 10% before we come down. And that difference will be all because of the disruption that Putin's war imply for commodity prices, supply chains, and shipments.
Mohammed also wrote an opinion piece for us. You can check it out on the Bloomberg. Type OPIN GO or NIL Arian. Let's get over to Andrew Sheets, Chief Cross-Asset Strategist at Morgan Stanley, to get his take. Andrew, we're hearing more and more people saying a 10% printout is a possibility. This puts the Fed in an incredibly difficult position because you've got the inflation to fight clearly, but also slowing growth concerns. How do you square that circle?
Yeah, thanks. Good morning. It's nice to be here with you. So we think the Fed errs on the side of the inflation concerns. Part of that is, we think that Chair Powell made a pretty clear commitment that he wants to do whatever it takes to bring inflation down. That credibility is very important. But also, we think in both how Morgan Stanley is tracking the economic data and how the Fed is tracking the economic data, that the economy is still fine in the first quarter. The growth is tracking okay, that this conflict is not going to tip the economy over into recession or a severe slowdown. And so that gives the Fed, we think, more leeway to ultimately hike rates and hike rates further up towards a higher terminal rate than the market's currently pricing.
Andrew, so that's the war in Ukraine clearly will be something that will be thought about a lot by that particular central bank and many others that are meeting this week. What about what we're hearing out of China at the moment? Further lockdowns, big lockdowns being put in place, in particular in the tech-focused area of Shenzhen right now. How much pause for thought does that give global policymakers around the growth story, around supply chain disruption that could ensue?
Yeah, look, so this is another really good point, is that the lockdowns in China, further lockdowns in China production, are yet another negative supply shock for the global economy, for the U.S. economy. But that sort of negative supply shock is going to create only more inflationary pressure, which we think the Fed would continue to hike rates and continue to tighten policy because of. So I think it's just one more link, actually, in terms of why the Fed ultimately will need to keep hiking, will need to hike to a higher terminal rate than the market is currently pricing. And again, while these supply chain disruptions could be significant, we don't think they are going to slow economic activity enough where they would reduce more inflationary pressure than they would contribute to.
Okay, and Andrew, we've been thinking about that inflationary pressure because, of course, of what we've seen in commodities. Today looks a little bit different, a little bit of respite from the higher commodity story. We're down more than 3% on Brent with a 108 handle right now. But the direction has been upwards. We've seen a substantial spike up in oil prices. I know that you've been doing research on what the after effects of that spike in oil prices might be for other asset classes.
Yeah, great. So when we look at past periods where oil prices have spiked significantly, what we see is initially the market being quite weak over kind of the next month after those larger spikes, those kind of 15% plus up moves in a month. but then actually ultimately doing well. And so those spikes tend to be more fleeting for the market than permanent. That's especially true when the oil curve looks like it does today, when it's backwardated. That tends to be more consistent with strong demand, which is indicative of a strong economic backdrop. So I think the same playbook could play out today. We're obviously in a period still where we're seeing some weakness, but the curve being backwardated, we think, is still consistent with actually a pretty solid global backdrop. We think it's more inflation than stagflation at this point. And ultimately, we think that actually means that longer dated oil prices can be a little bit higher. Front dated, the front part of the curve is close to our forecast. The back part is lower.
Andrew, let me take you to the tail risk scenario, and it's one that Bank of America lays out of Russia cutting off Western oil supply. They say oil could go as high as $200 a barrel. There'd be a credit crunch. You'd see high yield basis widen about 500 basis points. Andrew, do you need to have preparation in your portfolio for such a scenario, even if it's not your base case at this moment?
Yeah, thanks, Danny. Look, I mean, it's clearly a possibility. I mean, I think it's a risk the market, is thinking about. I think that might help explain why, European assets saw such a significant underperformance over the last month. They clearly are more exposed to these sort of energy disruptions than other markets. I think that if we think about these risks, though, we do need to think about, some important factors in terms of what's priced in. And there, I think the oil curve itself is quite interesting, because the oil curve is pricing, quite a bit of tightness, quite a bit of risk premium in kind of oil over the next month or two. But that longer term oil price, the oil price 6 months from now or 12 months from now, drops off significantly. So yes, I think the market is afraid of that disruption. It's not afraid of that disruption lasting for a more severe period of time. And I think in any scenario where we're talking about, say, materially higher default rates, oil price disruptions would need to occur for a longer period of time. So as a portfolio hedge, we like that longer dated oil as a way to hedge against that.
Okay, so it's not just where we spike to, but also the backwardation and the structure of the oil market that's important. Andrew, thank you very much for your time. Andrew Sheets joining us there from Morgan Stanley. Coming up on the program, we'll get to the geopolitics. Bettina Renz joins us, University of Nottingham Professor of International Security. We'll get her perspective on what diplomacy can really achieve this week and the situation on the ground. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, District of Columbia Mayor Muriel Bowser. This is Bloomberg.
I do think that Putin set a trap for China, signing this huge declaration on February 4. On February 4, he already knew that he will invade Ukraine. And he already knew that bringing this visibility of China, a supporter of Russia, would have toxic consequences for Chinese image and for Chinese economy.
That was the Ukrainian ambassador to Japan speaking earlier to our colleagues here at Bloomberg. Let's get more on the war in Ukraine with Bettina Renz, Professor of International Security at the University of Nottingham. Bettina, good to speak to you. Thanks for joining. What is the role that you think that China will go on to play here in this conflict? Because they've been walking a tightrope up until this point, trying to maintain some sort of neutrality, but also stressing the strong relationship that they have with Russia and condemning some of the violence on the ground. So how do you see the role of China developing? Seems crucial as to where this heads next.
Yeah, it's very difficult to predict at this moment. Of course, so far, China has failed to come down decisively, taking sides in this particular war. And also, as I read earlier, the Chinese officials said that Russia's request for more weapons that was discussed in the media yesterday is American disinformation. So we don't really know at this point, of course, what exactly Russia requested. But of course, China is in a very difficult situation. And I say this not as a China expert, but as a Russia expert who knows a bit about the relationship between the two. Of course, Russia and China have a strategic partnership. There are many agreements when it comes also internationally about the US's role in the world, about multipolarity and standing up to what they see as US hegemony and so on. But there also is the understanding that in this relationship, China is much more and has been more important to Russia than the other way around, because economically, of course, China's relationship with the West and with the US in particular is very important.
Yes.
From this point of view, I think, well, we will have to see, obviously, how China reacts. But my hunch would be that especially if China perceives Russia to be on the losing side of this war, and obviously there are indications that this is clearly not going Putin's way so far, that they will be very careful about openly supplying military equipment and so on to Russia at this point.
Well, you know, we heard the ambassador in that interview with Sherry on earlier say that China's making the wrong decision here because of, you know, the economic ties that it's already forged with Europe. Those would have to be severed in case of, well, in case of a NATO versus Russia conflict. Is the bet here that, you know, Europe is already so entwined with Russia economically that they can't disentangle themselves? Is the bet here that China is also that deeply involved and meshed in Europe's economy?
Well, that again, I'm not neither an economist nor a China expert, but obviously from what I know, there is a lot of interaction, a lot of import, export going on, much more so actually than with Russia between the West and the US. And therefore, I would have thought that China will be quite carefully watching also how the US and the West is reacting to any potential Chinese involvement in this particular war at the moment. Because like I said, ultimately, Russia's economic relationship with China is less important to China than the economic relationship and you know, at least a workable relationship with the US and with the West.
Bettina, you wrote the book on the Russian military, and I mean that quite literally. You wrote the book, Russia's Military Revival, some years ago. Now we're in a situation where, as you said, much reporting has been done on the slowness of Russia's military. They reportedly looking to China for help in the military. What does this tell us about the state of play of Russia's military?
Well, I did argue in my book, which came out in 2018, that obviously the Russian military had modernized to a large extent. It was incomparably better compared to itself, compared to the Russian armed forces in the 1990s and so on. So obviously we saw how Russia performed in Crimea and also then in Syria, where they showed technologies that we had not seen before from Russia and standoff capabilities, excuse me, as well. However, I also said in the book that, of course, when it comes to operational art and overall capabilities, Russia still is behind and continues to be behind and not comparable to the world's most advanced armed forces and the US in particular. And this is also something we see, of course, now. I think in some ways, some analysts had overestimated the extent to which Russia would be able to fight these modern combined arms operations. But having said that, of course, that comes at little consolation to Ukraine at the moment, because in spite of not being as skilled as people expected, of course, Russia continues to inflict unthinkable and absolutely barbaric destruction on Ukraine, death, destruction of infrastructure, and so on.
And Bettina, I want to ask you about Russian leadership at this point. There seems to be a lot of debate as to whether this will, in the end, result in any change in leadership in Russia. Do you see any means by which that happens?
Not anytime soon. I think that would be my major point. It seems clear to me, and also many people would agree with that Russia's war in Ukraine was an absolutely massive strategic mistake on behalf of the Putin leadership, and it is irreversible in many ways. And obviously it will not be forgotten by the West, by NATO, obviously by Russia's neighbors, Ukraine, no matter how the sort of immediate outcome of the of the war will be in the long term. And Russia will will have a very hard time to recover from this in the long term. So I think ultimately there will be a change, or there has to be a change in Russia's political regime. I mean, we saw during the Cold War how the Soviet Union ended up when they basically put all their effort into military capabilities, when they tried to compete only in the military dimension, not being able to compete in other ways and so on. But the point is that I would not expect this to happen anytime soon. This could be a matter of decades.
Okay, no time soon. Bettina, thank you very much. Bettina Renz of the University of Nottingham, thank you for bringing us your thoughts. Coming up on this programme, in fact, coming up in the next hour, more on the war in Ukraine with Tina Fordham, Fordham Global Foresight's head of global political strategy. That's at 6:30 a.m. in New York, 10:30 a.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Danny Berger in London. Kailey Leinz is off today. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now with a look at what he's got coming up today in the program. And Tom, your single best chart, what are you looking at?
That's one indicator of the Pacific Rim, and it's suddenly the Pacific Rim, Matt. It's real simple. Things over there are a little shaky. Of course, all this coming off the war in Ukraine, but much, much more, including COVID in China. And one of the great thermometers of the Pacific Rim is to the north, and the Japanese yen. The chart's real simple. Yen, safe haven, stronger yen, has abruptly and with a vengeance gone the other way. And to be out to 117 yen is a big deal. Long ago and far away, David Malpass, then of Bear Stearns, now at the World Bank, talked to me about 120, 130 yen. It's sort of a shock that we would even get to 120, and a weaker yen, 130 is basically unimaginable.
And Tom, I know you're going to be talking about FX, putting FX front and center with some of the guests you've got coming up, but also the geopolitics, of course.
Well, the geopolitics is front. It's an odd day, and you're, of course, living it in London with some of the news flow. It's sort of a clumsy Monday. Elsa Lingos will join us with RBC with a wonderful perspective on Euro and those dynamics, and we are honored to bring people Seth Jones at CSIS. This guy is the real deal. He is the American expert on guerrilla warfare. There's no other way to put it. He's the legit special operations expert on what Ukraine needs to do.
A lot to stay tuned for then, Tom. Thank you. Tom Keene, co-anchor of Bloomberg Surveillance, will be back with that great lineup of guests a little bit later. And Matt, we've been remarking on how we see quite a lot of risk appetite in today's session. European equity markets to the upside, yields going higher, despite all of the negative headlines that we keep on covering.
Yeah, but wait, actually, while we're in the 3 box, let me go ahead and throw on my glasses as well, because I just wanted to do this at one point during the program.
Yes, for radio audience, we are all wearing glasses that I think are maybe all exactly the same pair as well. It's your glasses edition.
Standard issue.
Yeah, exactly. Sorry, Matt, go ahead.
Well, I was just saying, it's interesting to see this crash in China tech shares and still the risk appetite that we're seeing in Europe and ahead of the U.S. Open.
Yeah, absolutely. It does filter through, but it doesn't dominate. More Bloomberg Surveillance is ahead. This is Bloomberg.